Welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many, many years. We hold events multiple times a week in person in the past, from San Jose to San Francisco. Since shelter in place, we've been doing events online. We have an event nearly every day of the week. We launched on February 1st, 2010. At this stage, we have over 70,000 members among all our meetup groups in the Bay Area. We've organized, promoted, and produced over 2,285 events. We put on venture capital panels, pitch events, legal workshops, fireside chats, networking events, and more. Check out our schedule at ideatoipo.com. At this point, I'm going to pass it on to our distinguished moderator, Jason Putnam-Gordon. Jason, take it from here.
Great. Thank you very much, Rob. I'm going to just change you over to a panelist at this point, so bear with me as I do that. So as Rob mentioned, I am not only the moderator, but I'm going to be running the back end of this, so please bear with me if we have any technical issues. Look, welcome to Idea to IPO. Thank you very much for being here. It's always a pleasure to work with Rob. I've been working with him for the last few years. Today, we've got a very interesting and exciting panel. It's going to be focused on investment and innovations in health tech amid COVID-2020. So before we get going, I'm going to tell you a little bit about myself. I'm going to sort of acknowledge what's going on today in our environment as a whole, and then I want to tell you a little bit about how the panel is going to operate. So I'm Jason Putnam-Gordon. I'm a lawyer. I'm at Polsinelli LLP, which is a full-service law firm, national, with 25 offices, 900 attorneys. I'm in our venture capital and emerging growth companies group, and I'm also leading our venture health initiative, where we focus on digital health, diagnostics, and devices as well. The panel today is going to be 1 hour long, and we're going to have about a half an hour at the end for questions. If you have questions, there are two ways we'd like to go about doing this. One, if you'd like to ask them live, we would like you to raise your hand. I'll monitor that. I'll give you the ability to speak, and then you can ask your question and we'll be able to answer it. If either you don't have a mic or you don't feel comfortable asking a question, that's okay. Please just use the Q&A function on Zoom. This is also a reminder that we are recording this today. So upside is, if, for example, you don't get to catch the entire panel, not a problem. We'll be able to send it to you afterwards. You'll be able to check it out and view it. Downside, or something you should keep in mind, is, this is going to be a publicly available recording. So if there's some confidential information or something that you want to ask that's maybe private, now's not the venue to do that. Now, before we get going and we allow the panelists to introduce themselves, I'd like to first take a brief poll just to see who's in the audience today, so that we can figure out and kind of tailor our conversation to your background. So we've got questions up and live. Who's a first-time entrepreneur? Who's a serial entrepreneur? Who's an investor? Who's an academic, enterprise employees, journalists, or other? And I'll pause there for 15 more seconds and allow folks to answer. All right. So it looks like about a third of the room is first-time entrepreneurs. A little bit less than a third of the room are serial entrepreneurs. There are some folks who are at large enterprises, and there are a couple folks who are in the other bucket. So that's terrific. One more sort of pause that I always like to give, especially in this time, is that, today we're going to be talking about COVID-19, and we'll be talking about the venture community and what latest innovations, and we may get very excited at times as we're talking about it, but that is not to undermine or diminish the fact that the impact that it's having on our country and on the world as a whole. And also a lot of the civil rights issues that are also coming about at the same time. We're still very mindful of them and respectful that folks' lives are being immensely impacted and have also been historically impacted. So with that in mind, we've got three great panelists. We've got Brian Smith from Red Crow, Mary Jo Potter from Healthcare Angels, and Dr. Gary Goldman from Global Health Impact Fund. And since you are up on the upper left-hand corner of my screen, Mary Jo, I'll allow you to go first to introduce yourself, maybe discuss your area of focus or interest and set the stage.
Sure. Mary Jo Potter, here in San Francisco Bay Area. Joined for Keiretsu Forum about 20 years ago. Spent many of those years, and it was more of an avocation for the first 15. I had a day job, and I sort of did that on the side. And then once I saw how people were investing in healthcare as if it were like a consumer product or whatever, I knew it was time to do something different. So I started Healthcare Angels about 5 years ago. Then I became a general partner in Keiretsu Capital. I helped them curate a lot of the healthcare deals. Healthcare Angels is a network of folks just in the healthcare field in some fashion. We operate as subject matter experts in a variety of places for healthcare deals. I'm also a member of Band of Angels, an LP in Portfolio, Purple Arch Venture, Northwestern's Venture Fund, a number of others organizations. But at the end of the day, our most, I'd say our heaviest focus is around medtech. We do a little biopharma if it's been FDA approved, but other than that, I think much of pharma belongs in the VC world, but we're very active in medtech. As you can imagine right now, we're very busy. Jason, we can't hear you.
Sorry, there's a technical issue that I'm working on here in the background. I apologize. Mary, thank you very much for providing a little bit of information about yourself. Gary, if you wouldn't mind, would you go next, and then Brian? And I apologize again. I'm working on a technical issue in the background here.
That's okay.
Great. Thanks, Jason. Yeah, Gary Goldman, kind of a long background. So started out as a dentist, went from a dentist to physician. When physician became an anesthesiologist, been in practice for 31 years as a practicing obstetric anesthesiologist in the Bay Area. I currently reside in the Bay Area in the East Bay. And then I guess about 4 or 5 years into my practice, I'm also a serial entrepreneur. I started my first company at the time. It was around the time that the Yahoo portal had just come out, and we were still using 56K modems, and this new concept called the internet came out. And we went out, a group of us, and developed a platform and portal for the delivery of continuing medical education on the internet, raised money completely from our colleagues, built a company internally, all by clinicians and physicians, and then had a successful exit. Since that time, I've had 2 other companies. So as a serial entrepreneur, I pretty much worn every operator hat you could wear, from founder to CEO to investor. I'm also personally, I've invested in multiple healthcare investments as an angel investor. And then the other thing that I've done is, so I belong to Sutter Healthcare, 27 hospital system in the Northern California area. And when we started the implementation of the electronic healthcare record about 9 years ago, I was asked to come in and oversee for all 27 hospitals the development, implementation, and then optimization of Epic, one of the most common used electronic healthcare records for the system. And that provided me the opportunity, as having one of the single largest instances of Epic in the world at the time, to travel around the country as a consultant, helping some of the larger institutions, including where I trained back at Harvard at Brigham and Women's, to go there and kind of sit side by side with their developers and their users and train. And it was interesting to me as a clinician. You know, I feel like I've been a little bit of the anomaly, and I tend to be a Pollyanna about a lot of the investments. But I sat side by side with my colleagues to find out that most were disenchanted, disenfranchised, and not feeling like they had any control over what was the ensuing, what I refer to as the digital health revolution, which we don't want to turn into electronic healthcare record 2.0. The problem we've made with electronic healthcare records early on is that we did not involve the clinicians. So I sought out as my retirement project to start what we call the Global Health Impact Fund and Network. It's a clinician-founded, clinician-driven, and clinician-managed venture capital fund focused on initially digital health with our first fund, And then we're creating a global collaborative network of clinicians to actively engage them, give them opportunities to invest, to act as advisors, consultants, as active participants in developing and evolving the healthcare revolution. So that's where we are now. Our fund is a $10 million fund. We've raised 8 already. We've invested in 9 great investments, and we're currently building our collaborative platform out, which will allow clinicians to engage actively with portfolio companies and the rest of the digital healthcare ecosystem.
Thank you, Gary. Brian?
Yes, thanks, Jason, for having us and for moderating. It's great to be with Mary Jo and Gary today. So I'm Brian Smith, CEO and co-founder of Red Crow. Red Crow is a direct investment online equity crowdfunding platform focused on early stage healthcare innovation. Prior to founding Red Crow, I was with Abbott Labs doing marketing there and made a transition to the world of finance, where I was a high net worth financial advisor at Morgan Stanley in Boston. And while I was serving in that role at Morgan Stanley, I was also on the board of the March of Dimes in Boston. And very organically, I ended up with physicians as my clients, and many of those physicians were in the area of fetal medicine. And the chief of newborn medicine at Tufts at the time called me up and said, it was this great medical device, a new fetal monitor that Tufts had IP on, and they were trying to get it funded. But they had found themselves in a position where they were just way too early for VC type money. So I went and met with them, and their thought process was I could introduce the company to my clients. And when I got back to Morgan Stanley, 2 things became clear. The company was too early for Morgan Stanley to invest in, and I could not represent the investment to my clients because it was not a Morgan Stanley investment. So I made a personal and professional decision to leave Morgan and get involved with this company. And anyone who knows my personal background knows that I've had experiences around premature birth, my wife and I. And so this was important to me. It was a bit of a social impact component as well as, of course, a financial component. And from there, the company was looking for $3 million. I was able to help them secure some investments. But what became very clear is that there was a real appetite for early stage investments that investors were not getting access to. Mm-hmm. And around the same time, 2010 this was, I made a transition from the East Coast to now San Francisco where I live, and was watching crowdfunding and what was happening in the crowdfunding space. And I remember thinking, if crowdfunding ever made a shift where instead of donations, it was equity, this is a game changer for early stage companies. In 2012, the Obama administration wrote the Jobs Act that said private companies could now advertise on a platform via the internet and raise funds. So my co-founder, Jerry Harrison, and I stood up Red Crow about 4 years ago now, and we chose one niche, and that niche is healthcare, where we can create an audience where people from all over the world who are healthcare aficionados, doctors, investors, patients, patient advocates can have a voice and a say as these companies go forward. But the other component to that is it's been creating a lot of transparency on what is and what isn't a good investment. And I think we'll talk a little about that with all these COVID opportunities popping up. But that's a little bit of a high-level background, Jason.
Oh, that's terrific. And we're delighted to have each of you here today. Thank you for your time. Maybe we sort of start off with a softball question, which is just shaping the scope of the conversation and getting an understanding about what health tech is, what that means, maybe what has been going on pre-COVID and the few months before COVID, what's happened in the last 3 months, and then what we see moving forward. Open question.
Well, I'll be glad to start. I'd say the last couple of years have been busy in medtech anyway, so it's not as if there wasn't activity. And when we, about 2 months ago, once we were into COVID, we went to about 120 of our companies to see how they were doing with everything. And what we discovered, and apparently it's not too unusual, that about 25% of our companies are in trouble because of cash flow. They're still good companies. What they're doing is good. The problem is either their target market is shut down, the product development may be shut down, sometimes their labs are shut down. So there are some very vulnerable. About 50% of them were just going along and
Oop. I think she accidentally hung up.
they're doing okay.
Oh, there we go.
Sorry, I've got a call that came through. And then another 25% are doing significantly better than they would have. In fact, a few of them who are working in the virus space or some related COVID solution, they're just booming. So I'd say if you're in the COVID related space, money's just coming from everywhere. If you're in traditional med tech, going through the normal processes, I encourage people to have 12 months of cash, because I think we're going to have some challenges in the next 6 months for those companies. Again, that's the med tech space.
Yeah, it's Gary, so I'm happy to chime in. I think, first of all, taking a step back from COVID, when you look at the healthcare market, I don't think anyone's going to argue that it's not a huge market. It's 18% of the GDP. If you look at it, we spend $3.6 trillion of annual spending on healthcare. And healthcare in itself is a very, very broad environment. If you look at the total addressable market, it's across many, many different areas. But I would agree with Mary Jo that when you look at an event like COVID, which no one could have ever predicted, it's a black cloud that's created in many ways from an investment perspective, some white clouds, because we've taken what I'll refer to as digital health and probably accelerated it almost 3 years and 3 months. And the reason is that from, again, we come from the provider perspective with our, is that, it's digital health in itself, its trajectory has been slowly going up over time. The whole digitalization of healthcare and data and cloud computing has been improving over the last decade. And digital health is providing, one, the opportunity to globalize solutions. It's also providing the opportunity to accelerate healthcare in a way that pushes care out of the acute care environments and into the point of care to where patients are. So if you look at those companies, and this is the approach that we take, is as clinicians, what are those companies, even pre-COVID, that could improve efficiency, improve safety, increase decision support, or provide decision support? By the way, I don't like the AI term. I like to use machine learning because it's not artificial intelligence, it's more assisted intelligence from the provider perspective. But when you put that all together, we can now take a strained workforce of healthcare providers, and more strained now than ever, and enable them to care for more patients in a safer, more efficient way. So identifying those areas that provide value in the pre, intra, and now post-COVID environment, it's pretty tailored down, drilled down to, you can look at telemedicine, you look at wearable, non-wearable devices, things that enable clinicians to provide more care to more patients remotely will only improve care moving forward. And what COVID has done is it's taken a lot of clinicians. I have lots of friends that have been in practice, and I've been in the venture space now for a couple of years, in digital health for more than that. And I know my colleagues, it's like, why do I need to use telemedicine? It's just, what's the advantage? What's the data that's out there? And there wasn't a huge amount, and it's been a fight. It's been a fight for the telehealth companies. It's been a fight for the device companies. And then all of a sudden, in 2 weeks, I was inundated by phone calls. How do I get onto telemedicine yesterday? To the point where I'm a council member for the ACCMA, our local medical association. And they came to me, and they came to a group of us and said, we need to put on a 6-webinar series on how to get onto telemedicine, just the basics for all these clinicians. And there's a company in the South Bay who's a telemedicine provider who had 10,000 new physicians onboarded in 1 week because of COVID. So it's created a lot of strain on the system, but it's also pushing us to the point now where, for instance, telemedicine, it's very basic. It's basically this. It's a connection between us. But it doesn't provide the necessary workflow support for the providers and the patients. It doesn't provide the necessary decision support. It doesn't even provide integration into electronic healthcare records. So although it's allowed us to provide care in a better way, it certainly has a lot of room for improvement and efficiency, which I call telemedicine 2.0. So that's how we're looking at the COVID crisis, is that, you know, it's hard as a provider who's in there taking care of patients to say that there's a white cloud out of this, but there really is, because it's going to take us to the point where we can now take healthcare and globalize it in a way that will improve care, not only for first world countries, but for third world countries.
So Jason, thinking a little bit about, you know, at Red Crow, how do we think about tech, health tech and innovation? And you know, what we really think about is anything that can treat disease and make people's quality of life better. And on top of that, you know, one of our missions has always been in making a social impact. Well, we think the great thing about healthcare is any innovation in healthcare is essentially making a social impact. I'm sure that Mary Jo and Gary see this all the time. Founders who have had a personal experience and decided to do what I did and maybe change careers because they want to make their impact where they could see advancements. I think one of the challenges, and it's been the great thing about even the world of equity crowdfunding / crowdsourcing, is that unlike a lot of traditional VCs that are looking for home runs, because if you read the stats, they'll say 9 out of 10 startups fail. Well, you need home run companies in that portfolio to make up for the losses. And yet when you talk to physicians and you talk to patients, time after time, they're seeing innovation that can change their life, can change somebody in their life. And for an investor, investing in those type of innovations that can actually get to market, it may be providing a single, a double, but coming from the world I came from in retail wealth management, a double in a private company that you get in early is a really good return. You don't need a home run. And I think that this is where, when I think of healthcare innovation, the innovation isn't just in with the technology or the therapeutic or the health and human services. It's innovation in how somebody can invest and how companies raise money. And I think what Gary also touched upon was we're just scratching the surface on this whole telemedicine world. Mm-hmm. What telemedicine can do to even save money. I think that that's something that you're going to start hearing a lot more of when we come through this on the other side. You'll be hearing about businesses saving on their travel expenses and realizing maybe they don't have to travel. But you're going to hear about healthcare systems finding new innovative way. Gary, I won't steal your great quote that you share with me, but you're going to see there's a new way to measure telemedicine and the effects that it's had.
I mean, that resonates with me. And I also think just with regard to telemedicine for what it's worth, I mean, I think also, I mean, there have been several shifts, right? There's the shift of the doctors now being able to, or feeling more comfortable or feeling compelled to use it for the providers in general. And then also the shift in expectations for what folks think will be acceptable norm. And I think that is, you know, without this situation, I'm not sure that would have happened, or certainly happened in the time frame in which it is now happening. So how maybe has this impacted your views in investment, you know, over the last 3 months since we started the shelter in place, and then maybe moving forward? I mean, what does that look like for your investment horizons, for the types of companies that you're working with, for the means by which you're deploying capital?
I'm happy to jump in. Again, we've been relatively lucky because our focus is digital health. Mm-hmm. I would agree with what Mary Jo had mentioned earlier. We're spending a lot of time on our current portfolio companies because we're, you know, again, our model is we feel like we're more than just a venture capital investment. We come in with a network of clinicians that act as advisors, consultants. Those same clinicians have helped us with the due diligence process. We believe we have a very strong two-tier due diligence process in which we actively engage the clinicians who are in the trenches going to be using these solutions to help us make those decisions. But even then, in the face of the COVID environment, it depends on the type of company. So now if you're a company that is depending on FDA approval and you're in the midst of clinical studies, COVID has had a negative impact on those organizations because now many of those studies were put on hold for many months. Number one. Number two is now there's a whole list of companies that now need to engage in their clinical studies. So there's basically a backup of companies that need to do these studies. So it's slowed down the pipeline process of getting through the FDA process. And all of that then takes a company and gives them a need to extend their burn rate out over a much longer period of time. And we invest in the pre-seed, seed, pre-series A. So many of our companies are early on because that's what we invest in. So we've had to engage and take a very active role. We have a board seat on almost every company that we invest in to sit down and look at the financials and look at the salaries and say, okay, we get it, but here we are now. Where is our burn rate going to take us? And now we were projecting to have our clinical studies done in November, but maybe it's now June of next year. So there have been some hard discussions that have to happen to keep your great investments viable because of an unexpected event like COVID. So for us, that's been a very important part of maintaining our current portfolio companies. Now, clearly, because we're in digital health, our shift into the types of investments we make has definitely been more targeted based on the COVID crisis. Because now, as I said earlier, and I think what we've all said, is that we can see what's happening in healthcare now. It's quite obvious that we're pushing care out of the acute care environments. We're even pushing care out of ambulatory environments. Physicians now don't want a full waiting room of patients. So they're engaging more with telemedicine. They're engaging more with things that make their practice on a day-to-day basis more efficient, which leads to, okay, when we look at a company, I can tell you from a clinician perspective with the input we get, if you've got a solution and it does not integrate into an electronic healthcare record, that's a non-starter. And the only way to really assess that is by having the informaticists and the clinicians play an active role in that. So there's that aspect of it, and that we're looking at those companies that are deploying care to the point of care. So wearables, non-wearables, decision support platforms that connect physicians and patients together. So clearly on that side of it, it's changed. And then when you look at the exit strategies, it's kind of interesting because now those companies, we've made a couple investments in what we believe are game-changing device companies, both in acute care and in ambulatory care. One company could monitor blood pressure in a way that's never been possible before across acute care all the way down to ambulatory, which will then, brings up the idea of data analytics. Sometimes I just got off a call before and I said, are you a service company or are you a data analytics company? Because at the end of the day, these companies are collecting data that we've never been able to collect before. Mm-hmm. And that will enable us as a healthcare system to take that data and then start to push it through machine learning programs in a way that we can actually improve our care, make earlier diagnoses, because we have access to data that we've never had before. So the whole groundwork, it's almost like an earthquake has happened because the whole ground has shifted because of COVID, forcing all of this to take much more importance. And I think the clinicians, the patients, the investors, the HCOs all understand now the value because we've been hit with such a large crisis. We didn't realize the gaps that we have, and now we know them. But we do, fortunately, we live in a time of technology that we have solutions and that will happen. And that's the focus that we're looking on as an investment.
So I'll follow on with Gary's comment. No question, the first thing we did was go back to our existing portfolio companies to see how they were doing, which ones really just needed shoring up, not because they were not good companies, but again, just given the nature of what they did. So we did that first off. Now I would say for the new ventures, it is a little tricky. I know the venture folks that I talk with, they're seeing valuations dropping 20 to 40%. We are not seeing that in the angel group quite as much as the venture folks are. Because again, the kinds of dollars they need put a different pressure on them than it does on us. We are seeing, no question, if you're coming in with a new idea to folks that don't know you, there's no question there's going to be pressure on valuation. If you've already started and your project is in motion, then the pressure is not quite as bad there. But again, a lot happens. You know, we're going to know a lot more at the end of July, whether there's another stimulus or not, how that affects consumers, how that's going to affect the stock market. These pieces all work together because just like the first month when this all hit, the angel investing world almost shut down. Everybody just paused and said, yeah, call me in a month. Then the market kind of calmed down and the market went back up again. And so people said, oh, okay, we'll get back in the game. If that happens again, and then I think it's likely it will happen sometime in the next 6 months, we'll probably have another pause. But the good news is there's a significant amount of money on the sidelines right now. And I don't know that everybody really wants to dive back into the stock market. It's at a high valuation. The returns are questionable for 75 to 80% of those stocks. People are looking at angel investing, I think, much more seriously than they used to, both for a mission and a money orientation.
I'm gonna piggyback off the last point that Mary Jo just made, because I think it's a really important one. One of the benefits that I have is all the years I was at Morgan Stanley and building a business during a very volatile market. It was not the right time to begin a new career in wealth management in the middle of the banking crisis, but I learned a whole lot on what was working and what wasn't working. And I've shared this with all of the entrepreneurs that have been coming on to Red Crow, is that don't be discouraged. This is a really good time to actually begin getting the attention of investors that are looking for alpha in their portfolio. Because during volatility, very similar to what Mary Jo just said, public companies are going to ride this wave, but private companies are going to stay steady and hopefully have their growth, especially within healthcare. So if I'm an investor and I'm looking at my portfolio, my 401k, or my IRA, which by the way, many of the companies that are coming through the Red Crow platform, you can use your IRA to invest in. And a lot of investors don't even realize that they can start using IRA for alternative investments. So when I'm thinking about volatility in the public markets, where do I make money? I know healthcare is happening. Then this is why you want to begin associating with organizations that have the ability to vet and curate and do deep reviews, like the Global Impact Fund, like Keiretsu with Mary Jo, if they've got the right healthcare people looking at the deals, is start leaning on these industry experts that can lend a voice, lend feedback. And that's one of the things that Red Crow has done is, unlike Gary and Mary Jo, we do not invest in the companies, but we help them tighten their story up, get feedback from industry professionals from Cleveland Clinic. We just added Kelly Moley, who's now part of the Gates Foundation, and excited to have her for any companies that are addressing reproductive health in third world countries. But when you get this high level of expertise looking at these deals from both scientific side and business side, not only does it strengthen the opportunity of the investment, because you're working with things such as their path to FDA, how much money are they really going to need, but it's also creating a level of transparency. And one of the things I wrote down, Jason, that I think is very important, COVID-19 reminds me a little bit of the Bitcoin gold rush. You just throw COVID-19 at the end of your company and it's like, oh, I'm going to pay attention. However, you want to avoid a Theranos. And the void of Theranos is make sure these companies are getting in front of the right people before you invest. So you're getting solid feedback, because it is about transparency, especially in healthcare. You know, people may even have good intentions, but there's just some things that aren't going to work. And it's good to know that ahead of time.
Yeah, I would agree with that, with both Mary Jo and Brian. You know, when you look at, from our perspective, when we look at our investors, again, we're all clinicians. It's been very interesting because it's almost been as if COVID has identified something in clinicians that was always lurking but never brought out. And it was almost the premise of the entire vision for my fund was, how do I go out there and get these clinicians that are working so hard and they're in the trenches, and this is even pre-COVID, and they work, you know, 70-hour work weeks. And how do they actively get involved in any of this? When was the last time a venture capital fund came to a doctor and said, hey, I've got the next unicorn in healthcare. Why don't you come put some money into our fund, doc? Like, never. So it was the whole vision behind what we created. And now, you know, you fast forward to where we are now, and you know, we've given a talk at a thing called the Leverage Accelerator Summit, which is basically clinicians who are looking at their practices and saying, I need to do something different. I need to get involved somehow in investing. I need to get involved in real estate. I need to do something else to make my life more full. There was actually a study out that showed that doctors who did more than one thing were much higher on the happiness curve than if they were just providing clinical care. So for us, I sit there now with investors because, you know, our model, again, we're not a typical venture fund where we're out there raising money from an institution. I'm pitching individual providers to invest in our fund. And it's really interesting to hear the feedback and how it's evolved, because now, you know, what do I do with my money? Because right now the markets are so volatile. Where do I put it? And again, from the white cloud of the COVID crisis, I mean, if you look at one area that potentially could be that recession-resistant environment, it would be private equity and digital health. So we're having less of a problem identifying investors. And then when you tie it to giving them a diversified, rich, stratified opportunity to invest across 15, 20 companies, as opposed to each individual company, which carries a higher risk, it becomes a very easy discussion with investors. And then when they have the opportunity now, as Brian said, if they don't participate, then we end up with the next Theranos. If they had 10 pathologists look at Theranos, we would have saved millions and millions of dollars on that investment. And it didn't happen because most venture capitalists don't have access in the way that a network like ours has to those subject matter expert KOLs to get involved in the process.
Just my own observation for what it's worth, and I'll keep it short because everyone has come to see you, not me, speak. You know, sort of what I've observed anecdotally is it's sort of a summary of what Mary Jo, you said, what all of you said, which is that, you know, there's a lot of volatility even sort of in this space right now. There seems to be sort of a trend of flight towards quality. So those venture-backed companies that have solid business plans, solid fundamentals, you know, they're getting pursued, you know, just as much, if not more than before, especially if they're in a hot area where there are extra dollars that are sort of pressing or trying to be funneled into them. For those endeavors that are less proven, we'll say, it's been harder for them to raise capital. And, you know, I think that's just in the last 3 months, and I think it's going to persist for quite some time. I don't know if anyone wants to take a stake or a position on how long they think COVID or this type of situation will be around, but I think I'd be interested in hearing it.
I mean, I can talk from a clinical perspective if you want to hear that part of it. You know, the effects of the COVID crisis clearly are not just clinical, but, you know, certainly the financial aspect of it as well. And we're pushing ourselves into a global recession. From a clinical perspective, I think, you know, we've made some great choices and some very poor choices certainly as a society on the North American side of things. I think there is a problem from the leadership down in terms of really doing what's necessary to contain a virus like this. And now we're seeing that effect by all the increases in many states of the virus. And this is not something that's going to go away tomorrow. It's not the flu. And that's a completely separate discussion. So the effects of this will clearly be for at least 6 to 12 months moving forward. And how we choose to deal with that clinically will determine the significance of the financial effects of it moving forward, because at the end of the day, Mother Nature will be the determinant of it, not anyone else. So it's a little bit, I have to say, even from a clinician, from an investor, from a VC perspective, a little bit scary, because we're not so used to the other. Yes, a lot of what we do is legalize gambling in a way, but I think, you know, if you can add the right factors into it for predictability, as Brian and Mary Jo pointed out, if you bring in the right KOLs and you have the right process and you have the right decisions, you can move in that direction. But we've clearly learned that Mother Nature, if she has a different idea, can put the whole thing on stop. And then here we are with 9 great investments that all of a sudden have no money left. So, yeah, it's. I think, you know, there's a term in medicine where we talk about atrial fibrillations. It's irregularly irregular. Well, this is unpredictably unpredictable.
Well, I may as well pile on here. A couple of things that aren't obvious to the public, but really need to be obvious to the entrepreneurs. Their buyers in many cases are the health systems. The health systems are losing, or over the 3-month period, $100 million a week in some cases. They are going to have to do a major regrouping of what they're doing, how they're doing it, where they're doing it. It was already difficult to get some of these great ideas into the market because of just the slowness of decision making. It's going to be more problematic for a while because, again, they've all got to regroup. Many of them have to change some of their business models. They've got to rethink things like telehealth and et cetera, et cetera. So I worry about the capacity for the industry to take in so many of these ideas. So what does that suggest? If you're an entrepreneur, use this time right now to refine what you've got, make it better, make it differentiable. It's going to be very tough to get people's attention for a while. So number one. Number two, make sure what you have is absolutely a need to have, not a nice to have. Number three, if you're a one-point solution, even worse. Find the other 3 pieces of the full solution, get together with them, figure out a business model you can all win, and go to the market with a much more robust solution. It's very worrisome to me, and it makes me sad because the industry wants to move. They're just totally inundated. And if we have another wave where they got to stop elective procedures again, all bets are off.
You know, for us, I think one of the benefits of having so many physicians as part of our scientific and business committee is you can tap into the minds of folks like Gary who are on the front line. And so when people try to tell me this is politically driven, you know, we got an election coming up, I try to put my finger on the pulse by talking to the folks on the front line. Are you seeing more hospitalizations? You know, you can keep testing you know, you hear all the time, people have tested positive, but they have no symptoms. They're going about their day and they have to quarantine themselves. But hospitalizations, I think, is how we measure, is this thing sticking around? Is it going away? So that's number one. Number two, I want to go to something very specific, I think, is a result of COVID and what is going to be sticking around. And we're hearing about it, and you can read about it, is what has this done to individual psyches? And I think mental health is going to be more important than ever moving forward. You may have seen the Headspace apps running on commercials that they're giving away, I think, a couple months free, which is really great initiative on their end. But if any of the entrepreneurs that are listening are in that field of mental health, whether it's a therapeutic, a technology, or an app, I think you're in a really good place right now. I think you're going to catch a wave. And as you started off, Jason, Unfortunately, there will be some economic windfalls because of COVID, but I also think a lot of these things were in motion. Mental health, we've been hearing more and more about. I think this propels it very much like it has propelled any telehealth or telemedicine technologies. The other thing I also want to say is, as a result of COVID and COVID sticking around, as a company raising money, you need to be different than the others because you're chasing the money. And what that means is you need to be able to tell a tight story. And in our world, it's all done online, which is not a bad thing because we recently spun out of Red Crow a new company called The Main Stage. These are virtual living deal rooms where you are constantly telling your story and updating your story and your company to keep an investor engaged, to show them real time the progress you've had, the changes you're making. Plenty of statistics are out there that says an investor will spend less than 2 minutes looking at a well-defined pitch deck. So that's not capturing the attention. And when you can't have in-person meetings and you're not willing to, someone's not willing to get on a Zoom call with you, but if you can share your link to your story that's living online, that's being different. And so from our end, like I said, we don't invest, but where we are investing our time and our energy is to help companies define their story and to engage investors in a way that's never been done before.
Jason?
Yes.
If you don't mind, I'd like to chime in on one thing that Mary Jo said, because I think
please.
it's an extremely important point. You know, from an investment perspective, whether it's venture capital or angel, you know, from the company perspective, the natural environment that we're in really fosters more competition than it does collaboration, especially in healthcare. You go to HIMSS and there's 27 companies doing the same thing across 3 football fields. And to me, that's always, as an investor and as a clinician, fostered more problems than it does solutions. I mean, again, it's an example of why we are with electronic healthcare records and interoperability. So I think the important point is, you know, that Mary Jo brought up is, and I was alluding to this a little bit earlier with the telemedicine 2.0 analogy. You know, we're invested in a number of companies, okay, that are doing granularly very different things. One might be a physical therapy company, orthopedic surgery company with a sensor and a workflow platform. And then another company that has a great point of care telemedicine solution that ties to like office management and revenue cycle. And then there's a third company that's solely working on AI related to orthopedics. Now, what we've tried to accomplish on our network side, push the fund aside, on our network side, is the idea that now you've got this portfolio of companies, and how do you now, as an investment group, take those companies and instead of looking at them individually, looking at them synergistically and say, you know what, if we now take your workflow platform and your decision support platform and your revenue cycle and telemedicine solution, and have you work together in a way where now you deliver to the clinician, to the patient at the point of care, a totally comprehensive solution, which now on one computer makes your life easier, makes it easier for you to take care of the patient, makes it easier for the patient to access information that you push to them that's patient information, but it came from your doctor, all in one environment. That has to be the future of healthcare, and COVID has really reinforced that. So Mary Jo, I completely agree that the idea of collaboration is an essential for success of these companies moving forward.
Can I mention a little something about exits? Because again, since most of our audience are entrepreneurs. The other thing that is important right now, more so than ever, I've always believed that the ultimate customer is the purchaser of your company. Everything else is a vehicle towards your value add to whomever that is. We used to always say, make sure every day of your life you put a line item on your to-dos. What have we done for our customer today? That's even more important now, and it fits with the collaboration issue as well as the survival issue. If you've got something that somebody desperately wants and needs, and by that I mean a either strategic buyer or financial buyer, then every day you've got to be thinking about how quickly do they need it, what is their capacity to bring it on, What is their capacity to purchase it? When is the ideal time for them to take what you have and scale it in a different way or a better way? All of that has to be part of all of the thinking all of the time, not 2 months before you go to an investment banker to say, let's sell our company. It's the sooner we do more of that, the better it's going to be for the industry, because the strategics want to have a say. They want to be part of it. They desperately need it. R&D has dropped 50% in the last 5 years in healthcare from your pharmas and your health systems. They can't afford it anymore. They desperately need these things, but we got to get them together sooner and better. So, because the optimum size for most investments in healthcare is $50 million. That's the purchase price, if you will, except for biopharma, a whole different animal. For med tech, the sweet spot's $50 million. That means if you can get to 10 million in revenue, you're an attractive now partner for a buyer. Those kind of thoughts have to be part of everything you do all the time.
So I think a number of you, I want to springboard off of that. And I think this question has sort of been answered, but in piecemeal on a couple of different vignettes. But if you're an entrepreneur and I think it's great advice. I mean, you should be focused on what your ultimate customer is. And that customer is going to be focused on making sure that you've got the must-have solution. How is it that you get that knowledge and feedback to know that you're actually moving towards that? Where can you get that information?
I'll start that. The way we handle it is we have a scientific and business committee. We have two sides to the platform. We call it the crowdsourced side, where we invite feedback, we solicit feedback from the general public. We form partnerships with the AMA, and they have 12,000 registered users. And whether they're investors or not, that doesn't matter. We want their clinical expertise. I think you're sensing a theme here that you can't just have a company throw it out there. I think you've got the greatest next medical device without having that collaboration with partners, with professionals, with investors who've been doing this for a long time, like Mary Jo. I mean, just even listening to her today, I'm learning some things that I've jotted down that we'll be sharing, especially around the exits. So you've got to find networks that are really focusing on this. And I know the Global Impact Fund is doing that. Really, really important, because we say at Red Crow, knowledge is meaning. And that's really true. It is meaningful for an investor, but more importantly, for the entrepreneur. Make sure you have the right advisors. And if you're, say, a cardiology company, don't just have a cardiologist as an advisor, but have go-to-market business leaders, people that have actually had exits. They know strategies around a 510K per se. They understand timelines, and more importantly, they understand what it's going to take financially to do it. So make sure when you go out for a raise, you're raising the right amount, that you don't come up short, and always account for an extra. Mary Jo, you probably even have a number when you talk to someone about account for an extra percent of what you think you need. So that is a really important component. And then for us, on our scientific and business committee, we have members from, and I know some are tuning in today, the Innovation Institute, where they can help take ideas on a napkin and bring them all the way to market. Zymedica is another partner of ours. As I mentioned earlier, we have folks from the Cleveland Clinic that want to see things early to potentially do pilot programs. So those are the sort of, that's the ecosystem you want around you, regardless of who you work with. And I would even say, if you go to an investment banker and you're going to pay them a percent to help you raise money, make sure they're really tapped in to the people in the industry, the clinicians like Gary, the entrepreneurs like Gary, and then the people like Mary Jo who have been making these investments for a long time. It's so crucial, and I think that it often gets overlooked.
Yeah, I think there are two sides to the answer to that question. Clearly the back end of it is early on, you have to include the KOLs, the subject matter experts, because if you're looking at a clinical solution, something that involves a patient, a provider, a system, you have to keep two customers happy. But the most important customer, and I can't tell you how many companies I've seen fail for this reason, is they spent a lot of time in development, didn't bring in the clinicians, went to commercialize their product into market, and we said, what is this? This does not even marginally represent my workflow. And that's dead in the water right there. Or you're gonna spend a couple of million more dollars to re-engineer your solution. We've addressed that. I think, Brian is also addressing that. That's in a way, not the easy part, but it's the easy part. But then you do all the right things and you get to market. And here's the part that we've struggled with, but there are some interesting solutions out there which are actually quite revolutionary when you think of it, revolutionizing when you think of it in terms of the sales cycle. So you take a company and you've now gotten through the first part, you've gotten through FDA approval, and now you have to commercialize, market, and sell that product. And who? Well, the reality is if you could look at, the 2,000 companies that are sitting at HIMSS, they're all pretty much selling to the same end client. It's either the HCO or a private practice or a foundation or a practice or a group of doctors and patients, right? But how do you know that it's actually going to work pre-release, right? You can have all sorts of great focus groups and ideas, but until you deploy it at the point of care, you really don't know. You really can't show its efficiency and its effectiveness and its safety and its ability to improve care. So we're looking at a model now on our network side, which somebody brought to me. I won't even take credit for it. But so here's an example. You have Company A. Company A has developed a clinical workflow solution. So now marketing director from Company A goes to HCO and approaches Chief Information Officer and says, we've got something that's better than sliced bread that can do all these things. Well, first of all, does it make money? Okay, can we charge for it? Or is this going to be a huge cost center, which quote unquote increases the efficiency and safety of care, but they're intangible benefits that we have to be able to measure and capture. That's the whole value-based side of things, right? And that's a hard sell because there's 10 other companies doing the same thing. But what if there was an organization that went back to the vendor and said, you know what? We're gonna do something for you. We're gonna charge you for this, but we're gonna take you into, let's go to UCSF Benioff, and let's take a cadre from that organization of nurses, doctors, physical therapists, all the end users that are gonna use this, and let's let them virtually use this product for a couple of weeks in a clinical setting, okay, in a test environment to see, does it actually perform the way it's supposed to perform? Does it deliver those efficiencies and cost savings that you tell us about? And let them use it for a period of time. And then after that period of time, let them give you feedback during that entire period as to the benefits and the cons and the problems in the workflow and the build. Go back to the drawing board and then come out with your product. And that kind of solution will significantly improve a company's ability to move a product. And if you can do that with 1 or 2 HCOs and you have a happy customer, then you have a sales cycle that becomes much easier and much easier to pave the way. And that's the kind of model we're using, and that's not something that really exists right now. So it's a very unique way to kind of sell. And when you first go back to even a portfolio company and say, well, we got this great idea, we're going to charge you for it, and they're like, well, wait, we're trying to make a sale here. So so that's a like kind of an extension of what we were talking about, is that we have to have ingenuity in how can we take our companies and provide them a way to get exposure through a network, through a model, to get in front of those decision makers at the institutions. It's not the CEOs, it's the CMIO, and it's the informaticists that are going to use it that really need to make the decisions. And if you can get them to buy in, then you have a very easy sales cycle.
So with that in mind, we've sort of reached the hour, unless Mary Jo, you had any comments or anything to add on that?
No, let's do questions.
Yeah, so well, I'm going to give each of you a moment to open forums, any closing thoughts on COVID, any way, and then you can also let the folks know who are watching what's the best way to contact you. and then we'll transition to questions after that.
Okay. Sure. Well, I'll go first. Feel free to contact me on my email. That's probably the easiest. Again, sitting in your shoes, I've been an entrepreneur a number of times and can't tell you how empathetic I can be because of that experience. But in many ways, it's a wonderful time to be an entrepreneur. So I guess I still want to end on a positive note, even though I'm a realist as well. The need for innovation in healthcare is so massive that even if we all literally work day and night for the rest of our lives, we wouldn't make a dent. So I want to encourage entrepreneuring. We want to help them with not just with money, but resources and people and knowledge and connections, whatever it takes. And now I wouldn't have believed this. I've been nagging Keiretsu for 2 years to do some kind of Zoom type of thing because we have 53 chapters all around the world. I said, why are we so parochial? Well, it'll never work. Well, guess what? We're not only were we forced into it, we've had double and sometimes triple the attendance at these opportunities because now people from all over the world are joining. And oh, by the way, we are seeing deals all around the world. Valuation significantly less, technology very impressive. And again, their experience in healthcare is so different than ours that they can get things into their market in some ways easier than we can. I keep telling a lot of my companies, go overseas, take your product, get it overseas. The barriers are much less, prove it over there and come back. But anyway, I think the opportunity's there if you can hang in there through this next 6 to 12 months.
I'll chime in. Yeah, so I think Mary Jo again pointed out there's different aspects of this. Is the entrepreneurs, there's the investors, and then there's even the institutional side of it, the venture capital investors. From an entrepreneur perspective, there are certainly numerous organizations like Keiretsu, like the Society for Physician Entrepreneurs. There's a lot out there. But in a way, I think COVID, as Mary Jo said, has forced us into this virtual environment. And it certainly has complicated our lives, but in many ways, it's given us more access, more time to information, to processes, to subject matter experts, because all of these organizations have been forced into this virtual environment. It's almost like, I look on my calendar some days, I have 3 or 4 competing events that I'd like to go to because they're all happening on a daily basis. But for the entrepreneurs, I think it's really important, and I think all 3 of us have focused on this, that in healthcare, with or without COVID, but certainly more focused on COVID, you need to be able to associate yourself with investors that are strategic. Money is money. There's plenty of money out there, probably maybe a little bit less now and less available, but it's out there. But in healthcare, more than many other verticals, the strategic aspect of your investors, do they have networks? Do they have the right resources to provide for you in terms of the KOLs and subject matter experts? Do they understand what are the needs of a platform in terms of EHR integration and in terms of what do the users really need on the other end of it? What are the problems? It's like the question is, what's the problem here? What are we trying to solve? Well, what are the problems of the clinicians? What are they struggling with before and because of COVID? So I think it's really important from an entrepreneurial perspective to get involved with those kind of organizations, like what Brian's doing, like what Mary Jo is doing with Keiretsu, like what Global Health Impact Fund and Network is doing, is providing that strategic nature to the entrepreneur, which improves their ability to access, improves their ability to raise capital, and do all those things that are necessary to get to the commercialization stage. And then can that strategic investor help you commercialize your product? Can they get you in the door of Cleveland Clinic and Mayo Clinic and Harvard and partners? So that's really important. And then on the investor side, I would say the same thing, but in a different way. If you're an angel investor in God, and I've done it way before my venture fund, Your ability to do due diligence as an angel investor is limited unless you associate yourself with the likes of a Keiretsu or a Global Health, or with, you looking at the companies that Red Crow is helping, because they're helping them get to the point to be able to pitch it effectively and structure an organization that makes sense from an investment perspective. So as an investor, it's really important to align yourself, if you're going to make those angel investments or syndicated investments, to align yourself in a way that you can do the due diligence. And then finally, from a venture capital perspective, what we're trying to create is that democratization of the investor, right? So if we create a network, yes, we have a venture fund, but what if now you could invest alongside a venture fund who spent all that time doing the due diligence, and you could invest in an SPV or in a crowdfunding investment alongside the fund, because we now want to allow the physical therapists and the nurses and all those other healthcare investors that don't have the ability to make large investments that a venture capital fund would allow. So there are other opportunities. And again, with the idea of collaboration, now having angel groups and CF groups and venture groups work together in an environment, a network like our network, that's really to the success of the investors and their educational opportunities. So I think that's where COVID has accelerated and pushed us, because of its virtualization of all of these things.
That's some amazing information, and tough to follow. But I think that, one thing I'll say is what has been really enlightening for us over this last, several months is Red Crow has been hanging out in the virtual world for almost 5 years now, a year of building the platform and almost 4 years of learning about the online experience, how investors behave online, and what's really working for companies when they present online. One of the reasons why Mary Jo and I hit it off so early, as I said, Mary Jo, these conferences are great, but they're becoming archaic. And the reason they're archaic is because you present, everybody goes their separate way. And there's no really great way to follow up. When it's all online, it lives and it breathes. And I think where entrepreneurs need to start to get comfortable is in telling their story in an online digital way. I mean, the platforms are there. You don't have to just go to Red Crow, but this is the future. It's now. And you've got to know how to tell your story. Crafting your story really comes from spending time with all the types of networks we've been talking about today. That's what's going to help you get the tight story. So when you have a Gary Goldman or a Mary Jo going to a platform like Red Crow to look at your deal, or you do a digital deal room like the main stage, you're going to get their attention. Everything they're going to want to see about your investment is going to be there. The goal is that leads to an in-person conversation, that you've already got them excited. They're going to have specific questions. So start thinking out of the box like that. And then the last thing I will say, Mary Jo's probably heard me say this before on another panel, personal advice. And I think more than ever, this is where you got to dig deep as an entrepreneur. But we always say, very much like when I gave up my job at Morgan Stanley, and many others have done similar career changes, as an entrepreneur, it's day in and day out, and it's a grind, and you got to burn that ship. And the best entrepreneurs have burned their ships, meaning there's no going back out to sea. You've come to land, and you're going to conquer that land, and you're going to give this everything you have. And right now is that time. They always say success is right around the corner from failure, right? So don't give up. And you think you failed, you haven't. Just keep going, and you'll get the attention of, a Gary or a Mary Jo, and the next thing you know, your life will change, and it happens. So hang in there, stay positive, and don't test positive.
Jason, I'm going to say one other thing because I didn't at the end. So if you need to reach us, want to reach me or our fund, you can reach me, and it's also in my label up top. It's Gary at globalhealthimpactfund.com, and you can also register and become part of our fund and network at the website, which is www.globalhealthimpactfund.com.
Well, terrific. Well, we've got about 20 minutes or so for questions, and I'll start answering them. So I'll take a couple of the Q&As first, and then it looks like at least one attendee has his hand up. Almost everyone is working on a healthcare startup. How do you shine in the crowd?
Wow, that's a pretty general question.
Yeah.
I guess, you know, first of all, you know, I think we talked about it before. The total addressable market in healthcare is huge, and there's probably 15 different areas in which you could target. So I think, first of all, it depends on which area you put a title under it, and the more addressable market sectors you can address, the higher your chances of success. But again, I will reinforce the fact that, and again, our network fosters everything from incubation through commercialization. Get involved in a network. If you've got an idea as an entrepreneur, get involved in a network with, if you're a healthcare provider, certainly with your colleagues. If you're not a healthcare provider, even more importantly, get involved with a network that has the healthcare providers who can be your advisors, consultants, help you, you know, work with the Red Crow and help yourself put together the right presentation for your solution. Work through your presentation in a way that makes a cogent, you know, presentable way to present to investors, and then involve those KOLs or subject matter experts and have them look at it and say, this does make sense as a product. That's, I think, the most immediate steps. I mean, if you don't do that right at the beginning, then you're setting yourself for a potential redirection of your company or a failure if you don't in healthcare.
Yeah, I heard two good ideas this week that I'll pass on. One is, if you have a grandmother, corner your grandmother and say, Grandma, I need to practice my pitch. And if you can, in one sentence, have your grandma understand what you do and get excited, you're onto something. So that's where I'd start. Then I would take my pitch deck, all 28 pages of it, cut it down to 9 pages. And on every page, I would ask myself, is this a Geico page? Now, what do I mean by that? Everybody knows Geico's one-liner. We'll save you 15% on your insurance, right? And right away, they get your attention because they solve something that maybe I didn't even think I had a problem. I thought I was sort of competitive. Well, maybe I'll make a few phone calls to see if I can save some money. Whatever it is, and again, presuming you have a legitimate solution to a legitimate problem, then the most important thing is every step of the way, don't talk about features all the time. Don't talk about how many years it took you to develop it, and nobody cares. They want to know, what do you have that they don't have, that they may not even realized they needed or wanted, and there's nobody else that can do it like you, because you can do those things, the rest is easy.
Those are great answers. Here's a little bit more specific question. Do you think Salesforce can give a good start to set up a healthcare startup on top of it? And would it be worth it? I'm not sure. Do folks have a working knowledge with Salesforce to be able to answer this, or is no?
I mean, is the question more in general, I mean, like a CRM? I mean, should you be using a CRM type of solution, or specifically
I mean, that's
Salesforce?
It's unclear to me. Let's go to some of the live questions, because that's kind of the hard thing with the
right.
Yeah. Okay. Let's see. So we've got Zaki, who I'm going to allow to talk. And
hi, yeah, thank you, Jason, for moderating. It's been a great panel, and Gary, Brian, Mary Jo, great insights. Thank you very much. I'm the CEO of Creatus Technology. We are a data analytics cloud platform company, and I am the fortunate CEO of the company because I'm in the 25% Mary Jo mentioned about in her last grouping. Our business have received a lot of traction, and I'm basically cautiously growing the company because of all these things that you have talked about. I share the same concerns about next to 12 months. So we were making a manufacturing operations management software, which we still do. Unlike any other solution, it monitored the interaction between inventory assets and people. So I stopped at people because we were already measuring people-to-people interactions and the distancing between them. And we basically beefed up that side of our platform a little bit better. And now with integrated sensors and the cloud platform ready, we are basically catering to the contact tracing and physical distancing for reopening factories or manufacturing plants and so on and so forth. Now we're moving in an uncharted territory because of the EHR integration, such as Epic, or we are moving into an uncharted territory in an unregulated niche in a very regulated universe. So from an EHR perspective or from a regulatory perspective, what would you advise to an entrepreneur like myself growing this company?
I'll chime in.
Answers cloud platform, we're basically collecting a lot of data and analyzing it, but it is not regulated.
I'm looking at your website right now as you're talking. Well, from an EHR perspective, it's actually pretty straightforward, no matter what the platform is. It's essential, especially if you're providing a solution where a clinician is interacting with an electronic healthcare record during a care encounter. It's 100% essential that it completely integrates in a bi-directional way with that solution. Now, if you've got an AI solution where you're just pulling information from an electronic healthcare record and you're not, bi-directionally populating an electronic healthcare record, that becomes less of an issue. And there are a number of solutions out there which easily facilitate the big players like, Cerner and Epic. But it's absolutely essential. But again, going back to the first point, I can tell you, for every 10 companies I look at, 6 of them we won't invest in because they can't. Everyone tells you they can integrate into an EHR, but what that really means is that they're not really integrated. And now there's a whole new, there's fire and rapid fire and ways to integrate in a way where you can get it up and running in several weeks. What I would suggest is if you're embarking on that, to go out and identify those correct partners that can enable you to build your platform in a way that allows you to integrate bi-directionally and allows you to do it in a very short period of time. Because when you walk in the door to an HCO and you've got something that's better than sliced bread, but it's going to take 6 months to integrate, that's pretty much a deal killer for most organizations. So it's the ability to do it in a seamless, rapid fashion that doesn't take too long.
Thank you.
So one question relates to the Kyoto Forum, because that's come up a few times. Maybe someone take a stab at answering what that forum is, how an entrepreneur could get involved, or at least get in front of the folks there, and what the process is there.
Sure, the easiest way is to just go on the website, and there's connections there. And if I were you, I would just attend a few of the sessions. Now that they're online, it makes it real easy. See, first of all, what it's like, how it works, get to know it a bit. Also, feel free to look at the membership, and if you know somebody, to ask them a bit about it. Eventually, it's a unique platform, and it does cost money, so that does cause many people to decide that's not the best vehicle for them. The way they justify it, quite frankly, is that you're in front of hundreds of very qualified buyers, and they're very involved in not only due diligence, but follow on and so on. So that's a whole different issue. But I would definitely walk before you run. Even if you join as an investor, they encourage people to not invest for the first 6 months. So again, it's a process. It's a wonderful community of 3,000 people all around the world, very involved, quite talented people that you can access. So the other piece of it is, quite frankly, those that have done well with it. I'd say 70% of people that use it have done well. I'd say 30% didn't. It's all a function of how aggressive you are with the contacts you make and your follow on with them. That's where you get the return.
Yeah. And I'll chime in and I'll disclose that I'm not a part of the management, but I am certainly a member. And I've only been a member for now probably about 1.5 years, 2 years. And I had some trepidation about, initially about the cost of it, but I can tell you now, 1.5 years, 2 years into it, that not only is it a wonderful opportunity to collaborate with other investors, and as Mary Jo says, come across KOLs and experts. They're a venture capitalist. They're there as their own individual investor. And the opportunity to learn with the Keiretsu Forum is pretty incredible. You know, I came in as a savant. You know, I know a lot about healthcare, but that's about it. You know, they say doctors are not necessarily the best investors, but I've learned so much about real estate. I've learned a lot about a lot of other verticals that I never would have had any knowledge base about, and they make it easy and enjoyable to participate, to learn. The due diligence is beyond compare from my perspective. I mean, you know, you'll see a 70-page due diligence report that's generated out of, you know, a number of participants, and you have the opportunity to participate that and learn. So I find it a very valuable environment, especially for someone who is not a seasoned investor who wants to learn across multiple verticals.
Terrific. So there's a question, speaking about verticals, about does anyone here invest in AI startups that accelerate drug discovery? And I'm going to just sort of throw on sort of a bonus question. You know, is there any particular acceleration in that space related to COVID? Do you see anything change in the last sort of three months and then sort of moving forward? Because that's been a pretty hot space for the last few years, I'd say.
Well, I'll say this. If you have an AI tool that can expedite the clinical process, the clinical trial process especially, I've invested in companies that have streamlined the process of getting participants. We've invested in AI companies that have tools or reagents or assays because of the AI tools that they utilize to help expedite the process. If you can do something to help them save time and save money, of course, there's great interest. And the pharmas probably are the deepest pocket right now.
So, yeah, and what I'll say about that is, first of all, as I said earlier, I won't use the AI term. I'll use the machine learning kind of algorithmic solution term. We've looked at a number of companies that are in this space because we can kind of put it under the umbrella of digital innovation. And being an individual who has been involved on the clinical side of research at the level of the point of care, you know, taking care of and getting involved in clinical studies that involve operative procedures and medications that are administered during anesthesia. It's a complex environment, you know, and FDA approval in clinical scenarios, especially for pharmaceuticals, is a long cycle. Certainly the COVID crisis has impacted that, as we talked about earlier, in terms of making it virtually impossible for a while to do a clinical trial. And now there are companies that, again, we're collecting, data analytics plays into this. We now have databases and we're generating databases of information that can be leveraged. It's very similar to what we do with electronic healthcare records. I mean, when you're collecting electronic healthcare records across 100,000 patients, that's data. That's very important, not personalized data, but general data that can be used to say, okay, well, for every person that had a coronary artery bypass who got these 4 drugs, what percentage of them wound up with a post-procedure complication of A, B, C, or D? And we could never do that before electronic healthcare records. So we're able to improve care and change care based on that kind of information. Well, now if we can algorithmically predict outcomes based on drugs in a virtual environment, virtual may not even be the correct word, but a in vivo environment, then the ability to accelerate new drugs and accelerate new solutions through pharmaceuticals becomes much simpler moving forward and much less expensive. So, you know, the question is, how do you identify those players, those companies out there that are developing solutions that, you know, you have to see them actually work. And that's going to take some time. So I think there's a huge opportunity from an investment standpoint, but I think it's going to take a while to figure out who the winners are.
And Jason, I think Mary Jo and Gary answered those perfectly. I just wanted to acknowledge, speaking of AI, and forgive me if I'm mispronouncing this, but I think it's Pion. wrote a question about using AI as a powered coach for mental health.
Perfect. Yeah.
They think they're solving a must-have problem. My initial reaction right away is 100%. I'd love to even learn more about it, and just maybe it's a great fit for the platform, because that's unique and that would really be cutting edge. I will say, we're talking about mental health, and we really need to get away from moving so quickly away from drugs when they don't necessarily need to be the first line, or at least if they are the first line, you're able to back away from certain drugs and have more of a experience. And I think, I was talking to Gary earlier about with his wife's practice, how prenatal health and OBs are working within this environment where especially at-risk moms necessarily not wanting them to come into the doctor's office and using telemedicine and different tools. Well, I think for therapists, psychologists, psychiatrists as well, what are some of the new tools that they can use to interact when maybe you have that one meeting a week or a couple meetings a month, whatever it is? What are some new tools that we can take advantage, as Gary says, with machine learning to help these professionals with their patients? And so I think that's a really exciting problem to be attacking. And I would say not even a problem, but an opportunity.
And I think to add on to that, Brian, the other part of it is also is if you look at the evolution of where we are and where we're going, there are a lot of platforms that are out there, a lot of innovations and solutions that are diagnostic at the core, okay? But they're collecting, again, let's get back to the data analytics. So let's talk about the company that develops this way to very easily monitor blood pressure in a way that we would have to put an invasive line in a patient's artery to get. Now we can do it by putting a patch over their radial artery on their wrist, right? Now, so this allows us to collect data about blood pressure that we've never been able to do. We can collect blood pressure across a 24-hour or a 7-day period when you're yelling at your wife or you're running after your dog, and in situations where we've never had that kind of information. And you take that now. So what does that enable us to do? It enables us to, one, we know hypertension is the silent killer because it causes heart disease, it causes stroke, it causes kidney disease, right? If it's unmanaged. What if we could now, by wearing a watch, capture your blood pressure passively? You don't even know we're taking it, and capture that data in a way to now make earlier diagnosis. Great advantage, right? More actively manage blood pressure the way we manage it, but now we can titrate it better. But what if now we can take all that data and move into what we refer to as called digital therapeutics, right? Get rid of the drugs. Why do we need the drug to control the blood pressure? Maybe the only time your blood pressure goes up is every time you're yelling at somebody. So now your watch tells you, you know what? Your blood pressure is starting to go up because you're doing some activity which is not good for you. You need to sit down and meditate for 20 minutes and bring your blood pressure down. And it gives you actual feedback based on the data it's giving the system, the platform, that you're successful or not successful. So now you're showing compliance, ability to comply with these digital therapeutics. So the opportunity moving forward for us to actually change healthcare in a way that we can do things that we could never do before is infinite, based on the data that we're going to be providing and our ability to passively generate this information in a way that we couldn't do before. So I think that's where the power of quote unquote, machine learning and algorithmic solutions is to take all this data and help us prevent disease and then also treat disease in a way that's less invasive and less pharmacologic necessarily than we can currently do, because we're working in a kind of a dark environment.
Yeah, it's awesome, Gary. That's fantastic.
So really quickly, because we're about to pivot and close, I'm going to invite Rob back on. There's a question about investors here based in the Silicon Valley investing in startups and technology outside of the Silicon Valley. Has COVID and the fact that we've sort of moved digitally, moved much more online, changed and opened that? 30 seconds each, and then we'll bring it to a close.
I'll just say real quick, that evolution was already in place. It's already starting to get COVID. The digital platforms are reshaping. It doesn't matter where you're from. You can be in Maine, and you can BC in the country. It doesn't. Yeah.
It accelerated. I would say it's been a straight line curve. The industry never used to do this. In the last couple of years, I've seen it go from 5 to 10% of their deals. I wouldn't be surprised it's up to 30 to 40% now.
I think I would agree. And I think if you plotted it out on the slope of the curve, it's a 45-degree angle, basically, because COVID, as Brian said, it's not like it wasn't there. We've had the cloud-based solutions. We've had the ability, but now, just like with telemedicine, it's forced all of us to become virtual. And really, frankly, for us, it's been great because that was the whole concept of getting involved in digital health. That's why we call it the Global Health Impact Fund, because at the end of the day, this is all global. And this has just enhanced our ability as investors, as entrepreneurs, as patients, as providers, to do things in a way that affects the globe, as opposed to just affecting your small regional environment. So I think the opportunities are really out there. You just have to go out and find them.
Well, thank you, Brian. Thank you, Mary Jo. Thank you, Gary. And thank you, Rob. And thank you to all of our attendees today.
Thank you.
Thank you. It's been a pleasure.
Mm-hmm.
Panel, thank you for that compelling and insightful discussion. So, once again, thank you, Mary Jo, Brian, Gary, for being with us today and sharing your expertise. Jason, thank you for moderating.
Mm-hmm.
Audience members, thanks for tuning in. Thanks for asking great questions. See you next time. Everyone be well.
Take care. Be
Thank
safe.
you. Stay
Bye.
safe.
Thanks,
Thank you. Nice to meet you all.